The Nifty is opening higher by just about 10 points.
We've actually moved up higher by close to about 100 points on the Nifty.
The Nifty is up 110 points.
Dips getting bought, but even consolidations getting bought. And really, the big theme has been the outperformance of the Indian market.
The market has had a very good run today. 115 points in the green for the Nifty and the Sensex, and the Bank Nifty up 345 points. Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra and here are the headlines for the day. The Lal Street bucks the global trend. Sensex and Nifty gain nearly 1%, outperforming its peers. Financials and metal stocks surge in trade. Financial markets stumble across Europe as gas prices hit a record high after Russia halts supply, citing the need for additional repairs to the pipeline. European Union leaders say they are not afraid of Putin and ready to react even as they scramble for energy security ahead of the winter. Cochin Shipyard tells CNBC TV 18 that an official decision on building another aircraft carrier has not been made yet. M&M Financial ended close to 3% higher post its August business update. Reliance leads from the front. That stock has done really well in trade today, and Morgan Stanley is very bullish on the stock, and they have raised the target price, citing that company's profits can double by FY27 as capex picks up. Federal Bank ends 3% higher after analysts say that a Kotak acquisition of Federal Bank was unlikely. ABB tanks after Credit Suisse downgrades the stock, while diagnostic stocks Dr. Lal PathLabs and Metropolis also fall on downgrades. Well, here's the lineup of what we have in store for you today. It's a packed show. In market opinion, in fact, we have for you with us Mahesh Nandurkar from Jefferies, who's the India strategist there. And in corporate voices, we have Mr. Madhu Nair, who's the CMD of Cochin Shipyard. All right, it's time to start the day with the day's market action now. The Lal Street bucked weak global cues with the Sensex and Nifty gaining nearly 1% in trade. Financial stocks and metal stocks led the rally, and Single is here with the day's market wrap. Anuj.
Very strong day for the bulls, and this is not after a gap up. In fact, the market opened absolutely flat, and after that just built on through the day, and the Nifty ended with over 100-point gains. The Bank Nifty once again outperformed, as it has done over the last many days, and that index was up close to 1%. The Indian market has been the best performing market globally among the big markets, and this despite a general risk-off sentiment that you're seeing in the global market, where the dollar index has gone up to 110. Still, the Indian market seems to be outperforming. As I said, the large part of this move happened because of move in financials. So that was clearly one space where, again, there was outperformance. So names like ICICI Bank, Kotak, and Axis did well. Metals was the other pocket where we saw some gains. So names like Hindalco, JSW Steel, and Tata Steel did well. The heavyweight pockets, they also outperformed. So names like Reliance, ITC, and Larsen & Toubro as well were also higher. In the futures and options space, there was a bit of a return of laggards. Exide and Amara Raja were the top two gainers. Both are between 6 and 8%. Indian Hotels has been on tear, up 5%. PVR was higher in trade. All in all, there's clearly a momentum in Indian market.
Oh, yes, it is. We have bucked the global trends. Thanks a lot for that analysis, Anuj. In fact, let's get you some expert opinion now. Mahesh Nandurkar, India strategist at Jefferies, said that while the momentum is in favor of India, valuations are uncomfortable, which is why he would like to maintain a cautious outlook. He added that he would not want to take the last month of FII inflows for granted. Listen in.
From a medium-term perspective, from a 6-month, 12-month perspective, I would still reiterate my, cautious view here because, while the corporate earnings are doing reasonably well, the economy is doing fundamentally well. But I think we need to differentiate between market movement and the economic fundamentals. These two are broadly correlated most of the times, but not all the times. And especially with what is happening globally, especially in the US in terms of the rates going up, the Fed balance sheet shrinking, etc., the dollar strengthening. All those things are definitely, not very supportive from the valuation standpoint. So I would still maintain my cautious view here. I basically believe that right now India is clearly benefiting from that TINA factor, as I mentioned, that many of the large emerging markets are not really finding, positive kind of flows from the international investors. And, we are clearly seeing that after a long gap of nearly 8-9 months, where we consistently saw about $4 or $5 billion a month kind of net selling the last 1 month has been very strong. But I don't want to take that flow for granted. That's what I can say.
Okay, let us get in some more opinion now. Ed Yardeni, president of Yardeni Research, expects the Federal Reserve to proceed with a 75 basis point rate hike at the next meet. He said that the market may remain in trading range in the near term and that the bear market is over. Take a look.
The Fed will, in fact, proceed with a 75 basis point hike in a few weeks at the next meeting in the FOMC. As you folks pointed out, there's still that September 13th CPI to come out. I think it's going to be a remarkably good number. I think it could be 0 or slightly negative, because we know that gasoline prices came down a lot during the month of July. We know that car prices have come down and that other prices have been moderating. If I'm wrong and we get a surprisingly high number, then I think the Fed's going to go for 100 basis points on the federal funds rate. And what's ahead is the Fed's commitment to bring inflation down. And as Mr. Ferguson said, the inflation rate remains way too high, way too much above 2%. I think we're going to be in a range for a while, a trading range for a while. And I think the portfolio strategy is most investors who are in stocks know that they're in it for the long haul. It's very hard to trade them. It's very hard to play corrections. I mean, I've seen plenty of people who told you exactly the right point to get out of the market and then forgot to tell you about when to get back in. So by the time they told you it's okay to get back in, you're back to where kind of you started. Meanwhile, you missed some dividend payments and all that. So I think the bear market's over. I think we're going to be in a consolidation phase here. We're not going to go straight up for the stock market. Money is going to leave China and go to India, and that may continue to also support the Indian market.
Okay, that's all about the equity markets. Let's talk about the money market now. The Indian currency weakened against the dollar, trading just a few points away from the 80 per dollar mark. The US dollar has touched a fresh 20-year high in anticipation of further rate hikes by the Federal Reserve. In a major hit to the European Union currency, the euro has dropped below the US dollar for the first time in 20 years. Well, the currency fell after Russia's energy supplier giant Gazprom said it will not be resuming its gas supply to the European Union, citing oil leakage in the Nord Stream 1 pipeline. And that, of course, takes me to the second headline now. That is of the shutting down of Nord Stream 1 gas pipeline pushed gas prices up by a sharp 36% across Europe. Gazprom said that gas transmission would remain shut until the operational defects are fixed. The company had kept the pipeline shut even last week for routine maintenance checks. Europe has been accusing Russia of using gas supplies to blackmail European countries because of the Ukraine conflict. CNBC's Steve Sedgwick gets us the latest details.
Is there outright shock of what the Russians have done? Absolutely not. I mean, everybody who's game playing this situation, who is looking at the chess game being played between Putin and the West, knew that this was a possibility. But just let me make the point for a historical comparison. There was a Cold War, a vicious Cold War, an arms race between the West and the Soviet Union for many decades. The Russians never turned the taps off for energy coming to the West during that period. So President Putin has done something that the Soviet Union didn't do at the height of various crises over that period, turned off the taps to Europe as well. And is it logical? Well, from his point of view, maybe. Sowing dissension, creating a cost of living crisis, trying to create splits perhaps in the EU response and EU support of Ukraine as well, but crashing the European economy potentially, and let's be brutally honest about it, sending Europe into recession is not an outside scenario given this enormous price of gas. What I've been hearing a very robust response from policymakers. Now, I know some voters it may well be a different response. I started off by asking Mr. Gentiloni, then Mr. Le Maire, about their reaction to what Russia has done. Let's listen in.
Even if the weaponization of energy will continue or will increase in response to our decisions, I think that the European Union is ready to react. Of course, we will have to save energy, we will have to share energy, we have high level of storage, and we are not afraid of Putin's decisions.
The key point is to pass through this winter without too many difficulties for European economies and European citizens. That's the key point.
In terms of the Western Alliance as well, I spoke to Lindsey Graham, absolutely key US Republican senator, very, very close friend and confidant of Donald Trump as well, who may or may not make another run in 2024. He firmly believes that that the Ukraine can win the war, which I think is incredible, given the fact that he believes a lot of weaponry will go towards Ukraine from the West and from the United States especially. But B, he thinks that the Western Alliance has been become more coordinated and perhaps reinvigorated by this as well. So if Mr. Putin was trying to split up the West, yes, in the short term, he's creating a lot of pain. Over the medium to long term, the policymakers I've been speaking to think he's made a catastrophic and historic mistake.
Well, gas prices are higher. In fact, let's stick to the energy space. Oil prices also gained ahead of the OPEC Plus meet today. While the consensus is expecting no change in output, a potential cut cannot be ruled out completely after comments from Saudi Arabian Energy Minister last week. So, of course, the outcome of this meet will be closely watched out for. To the third headline today, Cochin Shipyard ended the day mildly lower. The company's CMD Madhu Nair told CNBC TV 18 that an official decision on building another aircraft carrier has not been made yet. This came after Prime Minister Narendra Modi commissioned India's first indigenously designed and built aircraft carrier INS Vikrant at Cochin Shipyard in Kochi. Meanwhile, he added that the company is eyeing an annual growth rate of 12 to 15% and also that commercial orders are coming in at a faster pace. Listen in.
It's not officially confirmed. There have been discussions at the levels in the military happening, but then the formal decision on the next aircraft carrier is not yet announced. Commercial orders happen much more faster. For example, the entire 8 German vessels we need to deliver. The first vessels will have to be delivered in 22 months' time. And we are already, this contract was signed in March of this year. So from March 22nd month, we deliver the first vessel and then one vessel every 2 months. So that's a much more faster, commercial vessels are delivered much more faster pace. So when you actually mix this, I normally would guide anywhere between 12 to 15% annual growth rate. This would be what we are targeting. Defense order book, we have 8 number of ASW warfare corvettes, which we have already concluded with the Navy, which is about a 6,500 crore order, all the 8 vessels together. And we are L1 in the next generation missile vessels. This is another 6 vessels. The contracts are yet to be signed, but we hope the contract should be coming in. We were expecting it around now, but then probably in the next few months, let's put it that way, the contract should be coming. So with the defense, 8 plus 6 to come, so 14 vessels, the NGMVs are roughly about a 10,000 crore project. So that's the defense side.
Well, that's the word coming in from Cochin Shipyard. And meanwhile, M&M Financial gained close to 3% on the back of its business update. Abhishek Kothari is here with the details. Abhishek.
Well, M&M Fins released their disbursals number for the month of August. So for last 3 months in a row, they have had more than 3,700 crores of disbursals every month. So disbursals were at 3,740 crore for the month of August, which is up 75% YOY, but is down 4.5% on a month-on-month basis. So YTD, that is year-to-date disbursals, are at 17,150 crore, which is up 104% YOY. Now the collection efficiency remains strong at 96% in August. This compares to about 97% in the previous month. So stage 2 loans or the overdues, which are more than 60 days of dues, that has declined on a month-on-month basis, and stage 3 loans, which is the gross NPA ratio, has remained stable on a month-on-month basis. So the company has also mentioned that they expect stage 2 as well as stage 3 to improve in the month of September. Back to you.
Abhishek, thank you so much for joining us with all those details. And it's time for a break now, but stay tuned. We'll be back with the other headlines in a jiffy. Welcome back. You're still tuned into Markets Today on CNBC TV 18. Let's go across to the next of the headlines that we are tracking for you. To the fourth headline now, Reliance Industries ended the day over 1% higher after a Morgan Stanley report, which raised the target on the stock, said that it was a topic in the sector and a lot more. Sonia Shenoy is here with all those details. Hey, Sonia. So at the onset, let me say that Morgan Stanley was in any case bullish on Reliance Industries, but now they have named it the top pick in the sector and they have raised their target price on Reliance Industries to 3,085, which is much above the current market price. They believe that the fourth investment that Reliance Industries has made to the tune of $50 billion over the next 3 years. The progress is very firm on that. The investments have been made across all their verticals, whether it is chemicals, 5G, retail and new energy. And because of this investment, the company's earnings are expected to double by 2027. Not just that, Morgan Stanley has also said that this time around, the investment looks more feasible and it's supported by a 1.5 to 2 times operating cash flow and EBITDA compared to last time. So that gives them incremental confidence in both the investment cycle as well as the stock for the longer term. Back to you.
Okay, all right. Sonia, thank you so much for joining us with all those details. Moving on now to the fifth headline of the day. Federal Bank ended 3% higher after analysts said that a Kotak acquisition of Federal Bank was unlikely. What does it mean for the stock? Abhishek Kothari is here with the details.
Well, yes, I spoke to various analysts. They say that, why Federal Bank acquisition by Kotak Mahindra Bank is unlikely, given the fact that, first one is that for any potential acquirer, there needs to be a promoter with more than 20% stake who is willing to sell his stake. So looking at Federal Bank shareholding, there are no promoters over there and no one holds more than 10%. So a consortium of 2 to 3 funds have to come in together in order to sell or make the acquirer have 20% stake in the bank. Second point that analysts do mention is that for an existing banking players, acquisition of branches are no more, a large value add in their acquisition. So as RBI has already made branch opening much simpler and easier. So Kotak has always been on the prowl for an acquisition, but at its own price. So they say that nothing has changed in Federal Bank over the last 6 months, which can catalyze to an acquisition of the bank by Kotak Mahindra Bank. Back to you.
Okay, that is about Federal Bank, ended 3.5% higher in trade today. But what did not do so well was ABB. Fell over 2% after Credit Suisse downgraded the stock. But a recent rally and elevated valuation also weighed in. Nimesh Shah is here with all those details. Nimesh.
So it's a combination of both the stock rallying pretty hard and a large outperformer in the capital goods space, as well as elevated valuation. So on back of this, Credit Suisse has today downgraded ABB to underperform from neutral, and they've retained the target price of 2,600. Again, a meaningful downside from current levels. Now, as I said, ABB has been a rank outperformer. The stock has rallied over 70% in the last 1 year. Even in the last 6 odd months, the stock has rallied between 30 to 50%. So it's been a big move in that particular stock. While Credit Suisse is quite bullish and they see evidence of investment cycle picking up, but as far as ABB is concerned, after the big move, the stock is now trading at over 70 times FY24 price to earnings, and much of the expectations are in the price. So that's the key reason. Even on DCF, it seems at current valuations it implies a 20% CAGR growth for the next 20 years, with the highest ever record margins of 12.5%. So on elevated valuations and the fact that the stock has run up so hard, they've underperformed now ABB to underperform. While they're bullish on the capital goods space, the top pick remains L&T, where they're overweight on, and they still prefer Siemens over ABB purely from a valuation point of view. So the key reason for the downgrade is largely a big rally and the fact that valuations are very expensive now on ABB.
Well, thank you for that. But Nimesh, stay on. We also have diagnostic players which were in focus today. Dr. Lal Path Labs, Metropolis Healthcare. They were trading in red today after a brokerage note from Antique. They initiated a sell rating on the two stocks. Take us through the details.
As you rightly pointed out, both the stocks are under pressure on the back of the Antique note. On Dr. Lal, they have initiated with a sell rating and a target price of 1643, a potential 30% discount even after today's fall of 3%. On Metropolis, they have a target price of 1232, which also indicates a downfall of between 10 to 12% even from current levels. Now, the key reason why they have a negative rating on both these stocks, one, of course, is increased competition, and two, the COVID-led tailwinds are now behind. So the entire sector now is looking for a scenario of a lower CAGR. In fact, Antique says that the margins which all these companies reported in FY21 is unlikely to be repeated anytime soon, and they will revert back to the average of around 10-12% growth versus the 15% plus CAGR which these companies reported in the last few years. Even in terms of return on capital employed, it will go back to close to 25-26% versus a pre-pandemic levels of around 33%. So the entire sector is likely to be derated purely on valuations, and hence on back of that, they have a sell rating on both Dr. Lal as well as in Metropolis.
Valuations headwind for the diagnostic sector. Nimesh, thanks a lot for joining us. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.
चाहे खरीदना हो